Welcome back to Financial Markets. Hope you're all doing well. So it's been an interesting last couple of days, actually. We've had a bank holiday on Monday. So in the UK, so UK has been closed, but Europe and US has been open. And we had interesting news out over the weekend, which was about Trump basically releasing a couple of tweets saying he's planning on imposing more tariffs on China. And the reason being is because, he's basically using that as a negotiation tool. As this week we expected Chinese officials to come through into the US, about 100 delegates, and to try and hopefully resolve and get a trade deal. And so, because of that tweet where he's saying that he's putting out that I'm thinking of imposing more, it's obviously considered as like China has taken it as a threat, and so they have then responded saying, well, if that's the case, then the head that was supposed to come, I think I forgot his name now, but I think he's a vice president, and he said, look, well, I'm not going to show up then, and so that's put on a little bit of pressure on the stock market, and we've literally had a massive tank in the futures market, and we're down about 2% in the futures market. On Monday, this is on Monday, we're open. As you can see, there's a massive gap down, and so it's a big fear now on Wall Street. And to be honest, in the rest of the world, even the Shanghai index, to be honest, was down 6% on Monday, which is crazy. The index was down 6%, so stocks were down 10, 12, 15%. But this presents a really, really good buying opportunity, I think, for most people. If you are someone who's sat on the sidelines for a little while in the last quarter, or taken some profit off the table beforehand, it might be a good chance today or tomorrow, or even to sort of put some money back into the market, because when the market goes down 2-3%, you usually get 5-6%, periods of decline on individual names, and so it's a very, very interesting sort of time frame. And actually, for traders, this makes it really, really fun, because now we got a bit more volatility back into the market. Now, this might be a bit of a long shot, but another reason why this could be a ploy by President Trump, it could be because he could be thinking, and to be honest, people do think like this. It might seem long shot, but I don't think it's that far of a long shot. But so he's putting out this news for two reasons. One, again, it is his negotiation tool for China. Second, he knows it will cause a negative effect on the market, and he would want that. And why would he want that? And naturally, a little bit of a negative move on the market, and then pushing down a weakening of the dollar, and then trying to reinforce into the Fed's mind that, look, now is not the time to definitely not to raise rates, and potentially you should be cutting a rate, which will obviously benefit him. So this could be a big entire ploy to just get the market to slowly slow down a little bit, the stock market that is, with the bit of the weakness in the dollar, and then and then tell Jerome Powell, look, this is your now data. So why should you be rate hiking in this environment, and let alone not even holding just, but you should be cutting. And so that could be another ploy. And before people think, oh, well, why would you want the market to go down? But this is short term losses for big term gain. Naturally, he wants to make sure we don't go into recession before the 2020 elections, because that would then jeopardize his chances of winning. So naturally, he would want to make sure he prevents that happening. And if he causes 2-3% falls, 5% falls, but the market then recovers, it doesn't cause anything wrong with his presidency or make people feel any other way. And so there's no problem with that. And yeah, so that could be another ploy or tactic from him. And as you can see, I had a couple of shorts on anyway before on the Dow, and I'm down by about 300 odd dollars. But we've had a massive sort of gap down. So if we get another 3-4% fall, I could easily start getting into some profits. But even if I don't, it's not something I'm too worried about, because this is part of a more like a hedge for me, because I got my stop loss around 2,700. Sorry, 27,000. So pretty much at all-time highs. And just sort of holding this position, one, as a hedge on the portfolio, and second, the risk reward just presents a really, really good opportunity. And so yeah, I hope this video made sense to you, and hopefully you're enjoying this market turmoil rather than hating it. And see you guys in the next one. Bye.